All right, so welcome everybody. Hope your night's going really well here. So tonight, before we open things up, just wanted to give you a little bit of background on us, the hosts. This is hosted by AMG Mastermind, which is basically a group. It's a mastermind. It's a group of like-minded real estate investors and entrepreneurs who are looking to grow their portfolios. Where we leverage each other's backgrounds to educate, to develop, and to network. We also, in addition to that, offer educational opportunities, including courses, content, as well as these monthly speakers at our regularly held meetings. So if you'd like to learn more or interested in joining, please feel free to reach out to any of us on the call. We'd be happy to plug you in. With that, Adam, let's take it away.
Okay, so I'm very humbled to have Daniel Edry on here. He's one of our good friends and investment partners. I am truly humbled to have someone of his caliber. He has over 25 years of experience as a lender, developer, owner, and investor. So Daniel, tell us, how did you get started in the business over 25 years ago?
So I started off initially primarily as a bridge and mezzanine lender. It was I was a principal in a family-owned company called Meetup Capital Markets. We started off in the early 90s. My family got into the business. My father actually was in publishing, and he had a conglomerate of magazines and other publications. I don't know if you guys remember Tiger Beat magazine or Rock magazine. That was one of my dad's, and he sold and had a bunch of money and needed to find a place to invest it. Had always invested in real estate and started Meetup Capital Markets with me. So we had two major products. One of them was kind of a hard money bridge loan, where the point was we loan under 50% LTV based on a quick sale value. And it was a very high interest rate, high yield type loan. And the thinking behind it was, if you give me a rock on the moon at 50% of the quick sale value, I'm not going to lose money on it, if you can't do whatever it is that you say you're going to do. Well, then came 2008 and 2009, and we found out that our rock in the moon was not worth as much as we thought it was. And a lot of our loans went into default. Interestingly, so the other product that we had was, other than the hard money loans, were mezzanine loans. And on the mezzanine loans, we were loaning much higher leverage, up to 90% LTV. But we would do so on cash flowing properties. We would do so with great sponsors. We would do so in great locations with very good real estate, good sticks and bricks. And the interesting thing we found out was, when the market crashed, well, so all of those bridge loans, a lot of them went sour, and we had to work out these massive plans to retain our skin and to make our money back. The mezzanine loans, there were very few defaults on. And what that taught me was that to stick with the winners, and shortly afterwards, I changed the business plan for the company, and we started doing LP equity investing. And away we go. That started my LP investing career. I after our first deal, which was a great success, it was a New York condo deal, where we got kind of 40 something IRRs, very interesting returns, interesting equity multiple. I ended up starting my own firm, Monica Equities, basically because my dad was in his 70s and winding down, and I was in my 40s and winding up. So I started Anika Equities, and I started investing nationwide with great sponsors, and more often than that in great locations with great real estate. Now, the sponsor themselves, regardless of how you underwrite a deal, sponsors, a great sponsor can make a marginal deal good, and a bad sponsor can make a great deal terrible. So I definitely appreciate, this webinar discussing, vetting sponsors. It is, for me, it always has been, and certainly in all of my equity investing, is probably the primary due diligence, even before the property themselves, that the property itself that I'm looking at, or properties, or business plan. The first thing that I want to do before I decide that I'm going to invest with a sponsor is the actual vetting of the sponsor themselves. So that's kind of the short history, if that helps.
Okay, great. That's thank you so much for that. Now, tell us a little bit, like, what are some lessons you learned as an LP investor? I know that you learned a lot of lessons as a mezzanine and bridge lender, but now with the transition, I'm sure you learned some lessons when it comes to as LP investing in the early days.
Sure. Well, the lessons that I learned, primarily, I kept learning over and over again, and that is that check the sponsor not once, not twice, but 3 times, you always have to go and look at underwriting either the business plan of, if it's a fund, or the property or properties in a syndication, invest in a viable plan. But again, best laid plans, by the wrong sponsorship, can leave you in a terrible situation. So over and over again, more and more, I learned the importance of vetting a sponsor, and getting background on them. The one thing that I would say, from the start, is you can never ask too many questions when you're talking about investing your money into a deal. Now, granted, as a private equity firm, when you're investing 90% of the equity or 80% of the equity, you can ask for a lot more and get it. That being said, if you're a smaller investor, look, you can always ask. If you don't ask, you definitely won't get it. Certainly, sponsors keep some information close to the vest, and that's not always a terrible thing, because you wouldn't want your, for example, financials floating around all over the place. But then again, if you're investing 90% of the equity, financials is one of the first things that you would ask for. So just to give one example.
That makes a lot of sense. So what everybody needs to understand is there's certain things you could get away with when you're investing majority of the equity versus if you're just an investor investing maybe 150 or 25. You may not get all that. It really depends. Now, everybody's heard of Madoff. I'm sure you haven't. You're not living under a rock. And now, what are like some things that are like, to try to prevent investing with a Madoff? Like, what are some other things that you could ask? What are reasonable things to ask for when vetting? Let's say as a a smaller investor, 100,000 investor, not an institutional investor?
Well, the first thing that I would say is you can't always avoid investing, with, let's say, a Madoff type character. A lot of these guys that are involved in Ponzi schemes are very sharp, and they are slick, and they're buttoned up real tight. Many of these guys, I know a guy personally that lost about $1 million to Madoff, and he kept asking to invest, with Bernie Madoff. And he said, no, I don't have anything right now. Until, it was so slick the way that, that he kind of held out a carrot. So you're not always going to be able to avert yourself. That being said, when you do your due diligence, I would say this. First of all, if it sounds too good, it probably is. When you hear people guaranteeing returns on a real estate investment, and you hear guaranteed repatriation of equity, and anytime you hear guarantee, you should probably run for the hills, because there are two guarantees in life: death and taxes, and that's it. In a real estate investment, there are no guarantees, and anyone that tries to tell you that there is probably trying to sell you something that you shouldn't be buying. That being said, so whilst you can't always avert, some of these guys have their act buttoned real tight. At the same time, if you go into people's backgrounds, especially today is not like it was when I first got into the business. Today you have things like Google. The first thing that you should be doing is Googling. Type in their name, type in the company name, see what other people are saying. If your sponsor is somebody that has ripped off investors, without a doubt, it will come up. Somebody will have lost money and will have complaints and issues, and you can read them. And I would read them, and look, sometimes even good guys, get crazy investors, that think that they should be awarded more than anyone else is, and they get upset and they write a bad review. But you should bring up the review. Listen, I was on Google. I read this terrible review of you. What do you have to say about it? Or I pulled up this lawsuit that you were involved in. Tell me more about it. If anybody that's really active in real estate, it's going to be difficult to find someone that doesn't have some kind of lawsuit somewhere. Sometimes, through no fault of their own, a deal goes bad. And when a deal goes bad, people are always, looking, for the deepest pocket. Particularly, for example, in my case, we were a lender, and we were a hard money lender as well. And hard money lenders have the worst reputation of anyone else. And some people get upset, when their property doesn't work out and they end up being foreclosed on. And why wouldn't it? You would be upset too. You would probably try and leave a trashy, a review, or get into a lawsuit. So, follow through to the end of the story. Just because you see a lawsuit, maybe you want to ask the sponsor about it. That being said, if it looks like a duck, and if it quacks like a duck, and it walks like a duck, it's a duck. Okay. If you find a litany of lawsuits from investors, from lenders, it's more than likely that there's something wrong here, and whilst it's still worthwhile to bring up the question, if there's a long line of complaints, you should probably go the other way. So that's just one thing. Was the question asking about other ways that we vet sponsors? Did I gloss over that?
Yeah, sure, absolutely. There's other questions I have, but yeah, you hit the nail on the head. Like, definitely, Google is Google's an excellent resource for vetting. I mean, yeah, back in your days, in the '90s, they're Google, so you were pretty limited. So now, in terms of like track record, right? Like, how do you like verify a track record? Now you're dealing with someone that says, "Oh, I've done this, this, and this. I've done, I flipped many houses. I've done this many syndications." Like, how do you know if it's real or not? Like, how do you validate the performance of how their investment performed? If they actually, bought the property. Like, can you shed some light on that?
Absolutely. Well, look, it's not something that is foolproof at all. If somebody wants to cheat you really bad, and they have a clean history, they may be able to. Most people that run around cheating people have cheated people before. And, once you get wind of that, you'd be very careful to, take their advice on anything, certainly as it pertains to investing with them. But, there's a lot of things that you can do. Do you want me to list some of the things that I would do to vet a sponsor? Is that worthwhile at this point?
Absolutely. The more that you could share with us, the better. I'm sure everybody will agree here. This is great. Thank you.
Okay, so the first thing that I would do whenever I'm vetting a sponsor, again, you Google them. That's maybe the first, before you even waste any time on anything else. When I get closer, when I'm in the middle of legal, I would probably do a very thorough background search, something like LexisNexis. And in the LexisNexis, everything that, I would do, not only the corporation that you're investing in, but the parent corporation, the subsidiaries, the sponsor, the principal, the name of the principal, and run LexisNexis on all of it, see what comes up. And again, if someone's really busy, some things may come up, ask them about it. But if there's a litany, one thing after the other, beware. I can tell you, I once invested with a sponsor, and before we closed, I did a LexisNexis on just the sponsor name themselves, and I didn't go into the principal name or any of the subsidiaries. Actually, I left it in my counsel to do the LexisNexis, and they weren't as thorough as they should have been. And I learned from that mistake. Shortly after closing, I had heard from one of their investors that there were problems with them, and I did a more thorough search, and a whole litany of lawsuits and complaints and judgments, came out. And it was too late because I was already invested with them. There was nothing I could do. Now, luckily, this particular investment had several tranches of investment, and I stopped at the first tranche. To date, that investment, is the hardest one that I went, that I was involved in. Again, if it looks like a duck, it walks like a duck. The guy wasn't a crook, not necessarily, but he wasn't the most ethical, of sponsors either. Had I done a more thorough due diligence, I would have, a lot of this stuff would have come up. The other things, other things you can do is, get investor referrals, get lender referrals, call those people, and ask them. And when you call and ask them what deal they worked on with you, and ask them to tell you about the deal, so that it's not, a sponsor giving you a friend with a story. Ask details. Don't just be vague. Ask details about what they invested in, what the returns were, what the and make sure that it jives with what the sponsor was telling you. Another thing you should do is ask your sponsor for case studies. Tell me about other deals that you did. Tell me, how much did you buy for? How much did you spend on any renovations or CapEx? What did you end up, did you refi? And if so, at how much? What did you end up selling for? What was the IRR and the equity multiple of the deal? Hopefully they'll have prepared case studies to show you, but if they don't, they should. Now, again, remember, everything I'm saying is as a private equity investor that's investing the majority of the equity. So you won't always be able to get all the details that I normally get. One of the things that may be difficult, but you should ask for anyway, is always financials of the sponsor. And not just current financials, historical. Look at 3 years. Let's look at where you are now and at where you've been over the last 3 years. Any kind of information that you get on how successful they've been in the past is golden information. Additionally, what else can you do?
Now, quick question. When you're saying financials, are you looking for audited financials or could it be preliminary?
Look, if they have audited financials, that's always better. But they're not always going to have audited financials. Most of the time, they're not going to have audited financials. But I used to have everybody sign a form with their financials that I certified this is true and correct with a signature and a date, so that I had a document in my hands saying, these are financials you provided me, and you attested that it was true and correct as of this date. And that went into a file, so should there be a lawsuit in the future, you can pull that stuff out. Additionally, you should always ask questions. Ask questions about what they've done in the past. Ask questions about what the expectation is for the investment. Ask, for where they're getting the numbers, and ask for, whether vetting the deal in a worst case scenario, not just a best case scenario. Again, most of the good sponsors that you deal with will underwrite conservatively a deal. So hopefully you do as good or better. But, some less reputable sponsors may just try and sell you a bag of goods and show you a really interesting, return. And you want to ask about their underwriting and make sure that they're being conservative and not just overly aggressive. And look, to a certain extent, If the sponsor is not excited about the deal and optimistic about a deal, he's the wrong sponsor for you, because he should be. But at the same time, he should curb his enthusiasm with some, sober conservative underwriting. So, I always want to know about the bad news. And that's another thing you can ask, your sponsor is, when I do the background search on you, what is going to come up? Before you even do the background search, tell me what's going to come up. What am I going to see? What am I not going to like about your background search? Oftentimes it'll be, very telling, especially when you have a sponsor which is open and, has kind of open kimono about their past, and is completely honest about deals that, look, not every deal is going to be a win. One of the realities of investing in real estate is you're just not going to win 100% of the time. That's why we try and invest in a variety of deals or in a variety of properties, so that the ones that don't do so well will be compensated by the ones that do really well. There will be problems in anyone that's been really busy for 10, 20, 30 years is going to have losses as well as wins. And you shouldn't, at the first time you see a loss, think, oh, this is a sponsor I shouldn't invest in. Now, if you see it over and over and over again, clearly you have your answer. But I wouldn't be turned off by, one deal that went south at some point.
That's makes a lot of sense. Obviously, if you've been doing this for 20 years, 10 years, you're going to have some losses. Hopefully you have more wins than losses. That's the goal. Now that is amazing. So going back to like verifying their track record, like how do you look into seeing how they perform when they tell you I've done this, this, and this? I bought this property, I made this IRR, I made this equity multiple. Like, what do you ask for?
Well, one thing you can ask for is who are your investors in that deal and can I speak to them? And then you ask the investors and see if the story jives up, and again, the devil is in the details. I would ask a lot of the details, the ones that, aren't going to be memorized, about a particular transaction. Some things are public record. You can find out pretty easily what a property sold for. That's easy to look up. You can find out what they bought it at. You can find out what they sold it for. You can ask for, you prove, the budget that, and make your own assessment. But generally, I've found that if you do your background search, if you look at financials, in today's time, if a sponsor is a no good Nick, it's going to come out. You're going to find out, probably pretty easily.
Makes sense. With Google, you can find a lot of information on properties, or like what sources do you use to look up? Like, do you use any type of like Property Shark or something to look up the property information?
So, again, it's something you can do through your attorney. You can have them look it up. You can go to something like a Property Shark or, there's many other, depending on what type of asset, if it's a residential property, you can look at, the MLS, relatively easy to find out public information today. You know, there's numerous ways of going about it.
Makes sense. Okay. Now, when vetting a sponsor, now we live in like this COVID world, everything is a Zoom meeting. You know, do you like, would you make an investment with just over a Zoom meeting? Would you want to go to their office, you know, and try to build that personal connection and see their operation?
So I honestly, you know, again, it's a world of Zoom. It's very different times than it ever has been before. There's a lot of people that are still working from home, but assuming that we're talking about normal times, yeah, if I can go out and see a sponsor's, place of business and see their employees and their operation, it's one piece of the puzzle. In order for me to feel confident that I have a sponsor that's doing the right thing, that's capable. I believe in meeting and pressing the flesh. I would not invest in any property, certainly without looking at the property itself with my own eyes. The same thing is true with an investor. I personally wouldn't invest with anyone unless I had met him. And if you're talking about a developer or, just a real estate owner that, owns a bunch of real estate, they should have an operation that you can go and see. It'll give you a taste for the company culture. It'll give you a taste of how they run things, there are, when you see something like how organized is their office, is it a mess? Is there papers piled all over the place? Is there order? Is there discipline? These are important characteristics. Look, investing in a sponsor, investing in real estate in general, outside of the number crunching and the math, really important is your gut instinct. And I've always trusted my gut instinct. And you've got to listen to your stomach sometimes, when something doesn't feel right or doesn't smell right or really does smell right, you've got to trust your guts. I've always been in trouble when I didn't listen to my gut instinct.
That's a good one. Definitely listen to your gut. That is, I like that. Now, you might have touched on this, but maybe you could elaborate a little bit more on this. The next question is basically, let's say you're investing in a syndication, right? A sponsor is, they're enthusiastic, they love the deal, you like the deal. The numbers look very attractive. I mean, you're like, oh, I'm going to make this much money in this amount of time, and I'm going to double my money, and but like, what do you look for in their underwriting? Like, how do you like what do you look for to see if this is like, how do you know if it's conservative or not conservative?
Well, I mean, I want to see kind of the worst case scenario. Number one, I don't want to see the everything works perfect scenario. If we're talking about vacancy, I'm going to underwrite a property at the higher of the property's vacancy or the market vacancy, whatever's higher. I'm going to, if we're talking about refinancing debt, I don't want to see a 3% refinance 5 years from now. We can't make assumptions that what's today is going to exist 5 years from now. I want to see that there's substantial reserves. I want to see that, that they're touching on bad debt. I want to see the bad news and show me in your model where is the negative that we need to be aware of, and ensure that all of those metrics are aligned with what's market for that type of property or that type of investment. And honestly, when I see a pro forma or a business plan and it's not conservatively underwritten and it assumes 100% occupancy all the time, and it assumes that there's never any bad debt, and it assumes that money will always be cheap and plentiful and high leverage, I don't believe that I'm dealing with somebody that has, all bases covered. I don't like seeing that kind of aggressiveness because, so many times you'll have sponsors that promise you the world and, overpromise and underdeliver. I want to invest with the guy that underpromises and overdelivers.
I like that one. Under promise and over deliver. That's good. Yeah, that makes a lot of sense. And now, in terms of investing, I know we all been there, but for the new investors here, or maybe even experienced ones, right? Like, give us some examples of like red flags that you most LPs like what they miss out on when they're evaluating a potential sponsor.
I'm sorry. Could you repeat? I'm not understanding the question.
Oh, sorry. Okay. So can you give us a few examples of red flags that you think most LPs miss out on? Like what are the most things that people miss out on when looking at a sponsor?
So above all, the biggest mistake that is made often is not looking into a sponsor's background, is not thoroughly looking into, doing a thorough search, even a cursory search. Some people don't even Google, they'll just jump in all in, they like somebody's face and they like the OM. I always want to look at case studies. I always want to look at what they've done in the past. And again, I temper my expectations if a sponsor's got a long history. I'm actually more concerned if I don't hear about a deal that didn't, wasn't a knockout of the ballpark, because that's the one that they're hiding from me. Because, there just does not exist in real estate 1,000% batting average. It doesn't exist. And anybody that claims it does, I have issue with usually.
Okay. Now that's a very, it makes a lot of sense. So in terms of like now let's say you invested, what do you look for now when like communication wise, continuing disclosure, post acquisition? Like what do you look for in terms of like how do you handle your LP investments in terms of investor reporting? What do you expect from them, or what should what should investor ask for?
So one of the things that I often would like to do is ask to see what a typical investor reporting is. Show me how you report. Look, they don't always have to have fancy investment management, software. It's great if they do. But I'd like to see an email, which is a project update to investors. A lot of sponsors will not give monthly updates, they'll basically report something, if an event happens. I want to know that there's going to be continual reporting. I insist on monthly reporting, and I want to know what that's going to look like. When I do a private equity deal, in my legal docs, in my operating agreement, there'll be a long list of what I need to hear, in my investor reporting, of financial statements, of rent rolls, of P&Ls, of whatever it is that sometimes it's bank statements. If I'm doing 90% of the equity, I can ask for a lot. I can ask for a complete cash flow detail. I'm not even always going to review every single document, but I want to know that I have it so that I can review it if I need to. And again, if you're in a $5 million equity raise and you're investing $100,000, you're not going to get all this information. But it never hurts to ask, because sometimes you'd be surprised, even as a smaller investor, how much information can be available to you. You're never going to get it if you don't ask for it.
Exactly. I've learned that through life. Was it the squeaky wheel gets the grease? Or, so yeah, you never know unless you ask. 100%. That's a good life lesson right there. Now, in terms of your sponsors, right? We're talking about if someone, they're doing their own vetting process, but what do you look for your, potential investments? Would you invest with someone, that just started out? They have an excellent background, but maybe they've done a few deals. But what is your typical sponsor that piques your interest and that you would eventually do a deal with?
So there's a lot of people that will knock it out of the park on their first try. There's some people that are really smart and have worked with other companies that have been knocking it out of the park and, start their own enterprise. That being said, I won't invest with them. I'm not investing in any first rodeos. I want to see a track record. I want to see that they've been successful repeatedly over and over. I want to see that they know the business that they're in, and so that's, I won't place a bet on a new horse.
Now, in terms of, size, do you look for a certain size of a company? I mean, do you want to invest with a one-man show, or do you want like a certain amount of, do you look for multiple personnel in the company? Like, what do you look for in a management team? How many years of experience in terms of, most people say, oh, I've done a combined experience of 25 years. Well, maybe you have 5 people in there, 5 years each,
Yeah. So I want to see a substantial track record. For me, that means, a minimum of 10 years, minimum. Whenever, ideally I'm invested with someone that's got 20 years experience, that's got a team of, a sizable team. That's one of the reasons why I want to see their operation. I want to see that they, that they have enough resources within their organization to do what needs to be done to execute a successful business plan. If I have one guy that's wearing, 8 hats, I'm a little concerned, because in the best of times, they may be able to pull it off. In the worst of times, there's just no way, that the one-man show is going to be able to do everything that needs to be done when things go south. Again, it's not to say that the one-man shows or the first-time, investors or the new, young, energetic, guys are not going to be successful. They very well may be successful. They may kill it for many years. It's just not a risk that I want to take. And every investor has to gauge, what they're willing to tolerate and what they're not willing to tolerate. For me, I want to invest in somebody that's really experienced, and a team that's really experienced and has seen, market collapses, that has seen, hard times, that befallen, that have worked through issues. I don't want somebody that's straight out of college and can only talk about theory or hypotheticals. So
Makes a lot of sense. Definitely, I agree with you on there. Now, in terms of, do you look for like vertical integration? Do you look for do they have maybe larger investors? Are you looking for sponsors mostly like country club investors? Or are you looking for like a bigger type of company where they're vertically integrated, they have a nice large shop, and they do have, let's say, institutional investors? Does that make a difference for you?
Whether they have smaller investors or institutional investors doesn't really concern me that much. I mean, the one thing I can tell you that any sponsor will tell you is that they're 9 times out of 10 going to do a lot better for themselves with the smaller, mom and pop doctor and lawyer type investors because they can get away with a higher promote. They can get away with a lot more, with individual passive LPs than they can with an institutional investor. I can tell you, when I invest as a private equity firm, I'm doing the majority of the equity, I'm never a passive investor. I don't invest passively. I never have. Only debt products for me are passive. With equity investing, I'm used to investing 90% of the equity or somewhere around there. And I'm used to having all major decisions. So anything that happens outside of the business plan, they need to pick up the phone, call me, and get my approval. If I'm the majority of the equity, I get a say in what we're doing. And anything that, comes across that was not disclosed before has to cross my desk. And I get veto power because the majority of the money is my money. Now, again, you're never going to get major decisions if you're a $100,000 investor in a $5 million raise. Never. The only way that you would even have a vote is if you invest in a tenant in common structure, or TIC structure, which I would never do because I don't want all my, smaller investors having an actual vote in my own business model, because honestly, the doctors, the lawyers, the people that are successful, whatever else they've been doing that isn't real estate, are not always the best people to opine on the success of a real estate endeavor. I guess as a smaller investor, when you're a smaller investor, I would look for the sponsor to still regard me as a partner, and I've often, even though I've had a in a syndication where I have a lot of passive investors, if I'm planning on doing something different than what was originally disclosed, I'll often pick up the phone and call my investors, and especially the larger ones, and ask them what their take is. And this is what I think we should do, and what do you think? I might even put it up to a vote, if it's something that, because at the end of the day, as a quality sponsor, I want to take good care of my investors. My investors are supposed to be gold to me. They're supposed to be very dear to me. I'm supposed to care about how my investors feel or think about an investment. And if your sponsor is not showing that, I'd be a little concerned. Yeah.
So Adam, just going to jump in here. We're approaching the top of the hour, so I want to make sure we get enough time for the Q&A, which looks like we do have a couple of questions now from the audience. One of the questions, Daniel, is when you say background check, are you also doing a traditional background check, which includes credit report, criminal databases, et cetera?
So in tradition, when I do a LexisNexis, it's all included. I may do a credit report also, but the credit report is more, it's not of a corporation traditionally, it's of a person. And I want to know, what that corporation has done. If there are, lawsuits for the corporation, that's much more interesting to me than if somebody paid their Amex. That being said, it's not a bad thing to ask for a credit report. Usually, if somebody's not paying their Amex, there's a reason for that. And whilst I maybe don't need every sponsor, principal to have an 850, credit score, I'm probably not investing in a guy that has a 600. So because usually if they can't even pay their own bills on time, or they're certainly not going to care much about paying me when I'm owed.
Great, thanks. Another question that we got was, what are a few steps or resources that you have in mind to recommend to new LPs to further educate themselves if they want to expand on some of these topics that we've covered, but also just take the next step in terms of education on vetting sponsors prior to making an investment?
It's definitely an interesting question. I don't know that there is a lot of resources for this sort of information. I don't know if you can go to college and learn how to deal, with this kind of stuff. This is kind of information everybody keeps very close to the vest. It's experience. Unfortunately, some of this stuff you just have to learn by being in it, and by continually asking questions everywhere you go. The only dumb question that you ask is the one that you didn't ask. You should never be afraid to ask for questions. But unfortunately, when you talk about LP investing, I'm sure there are resources out there and there are books. I know all of my experiences from being out there and doing it myself, so I can't recommend any particular book or course or resource. Doesn't mean it doesn't exist, though.
Yeah, I would just say to echo your point, experience always trumps academics, in my opinion. But just anecdotally, I know that Adam and I had both been reading what we found was a pretty good book on this very topic, The Hands-Off Investor, if anybody's interested. It's a book by Brian Burke, which you can look up and find. It's published by Bigger Pockets. Another question that we have here from the audience.
There's another one right here. You see it at the hard copy. So you can see it right here. Mm-hmm. I'll send it later. Another good book.
Another question that we had, and I think it was answered, but if you want to maybe clarify, this person says, asking to speak with a previous investor is fine, but how would you verify that it's legit? Meaning, how would you verify that that person actually invested?
And the only way you're really going to have any idea is by asking a lot of very detailed questions about about the transaction that they invested in. And if they don't have, readily answers for you, you might call bullshit on it.
Fair enough. Adam, you want to take us out? I think that's the last Q&A, the last question we had.
And I wanted to mention too. I forgot to mention. Actually, I wrote an ebook. It's really a blueprint on vetting sponsors. I ran it by Daniel, and I know Mark. You looked at Gonzalo before we put it together. And for everybody that joined this webinar, I'll be more than happy to give you a copy of it. It's a good start. Obviously the experience, but gives a nice checklist of things that you should be asking for. And then we'll also have the replay of this video as well. They can go back and listen. And then you always have us as a resource. If you ever have any questions, feel free to reach out. And we'll always, we want to help people.
And I would say also, to piggyback on that, kind of these real estate masterminds, public forums, sites like Bigger Pockets, there is community now based on our new age of technology. And there's a way to get an answer to whatever it is that you want to hear, that you have a question about. And so you should immerse yourselves in, the education process and, in any venture that you decide you want to invest in.
Hey, Dan, if I could just throw one quick question out there. So say you vet your sponsor, everything kind of checks off the list. You love what you found so far. Once you kind of invested in that sponsor, what are the couple of things that you found that kind of like blew you away, where it was like, this is a great sponsor. This is the way that things should be done. Kind of a couple of things that you were just taken back that they had in part of their kind of like the protocol as they're doing business in general.
So one thing that always impresses me is quality reporting. I'm very impressed with sponsors that tell me bad news as well as good news. I want to hear all of it. I don't need a sponsor that's, or reports that are salesmanship. I want to be able to interpret the facts myself. So that always impresses me when I see somebody tell me something that I might take as bad news, and that doesn't try and spin it and, factually says, look, it could go this way, it could go that way. We're hoping it goes this way. It's one quick.
Thank you.
Yeah.
I see actually another question here. Bruno, did you get that one? Mark, you want to take that?
Bruno asked a last minute question. His question is about the market and kind of your outlook. He says, where do you see opportunities now, considering the effect the pandemic is having on suburban single family homes and the decrease in demand for inner city living? Do you think this pattern will continue in the long term, or do you think this is a short term trend?
So I am extremely bullish, as Adam knows. I'm I have my company TCS Anika Homes is an SFR. We buy, build, renovate, lease, manage, stabilize SFR. I love affordable housing, especially. I can tell you that I'm right now not bullish at all on any kind of luxury product. I believe that, whether we're in a recession or we're going to be in a recession for a matter of years, I've been waiting for there to be a correction in the market. And I prefer to invest in workforce housing, and I'm not really bullish right now on office or retail. With COVID right now, I might invest in student housing, but I would underwrite it, expecting that the initial years would be very lean, based on virtual, attending classes. I believe overall, though, in multifamily and in SFR, and I'm most bullish in anything that's workforce housing or affordable.
Great, thanks for that. I think that's the last question we had. So with that, I just want to take the time to say thanks to Daniel for taking the time to speak with us about this very important topic. I know it's a topic that's first and foremost on a lot of our minds. Both myself and Gonzalo have experience on the LP side and have learned sometimes the hard way some of these topics that Daniel has talked about. So hope you've taken out some notes, and if not, we'll be distributing this replay as well as the ebook that Adam mentioned.
Yeah, I want to thank everybody too. Thank you, Daniel. It really means a lot to us. It's always a pleasure to have you on here and just sharing your knowledge. It's truly humble to have you here.
Absolutely, Adam. My pleasure. Completely.
Yeah, thanks a lot, Dan. And next time I want to be an LP side, I'll make sure to give you a ring and see if the guy passes your
You can always call me. I'm always happy to opine.
To that effect, where can people find out more about you if they want to invest with you or just to ask you, say, a follow-up question, that kind of thing?
So right now, most of what I'm doing actually is not LP investing. I'm invested in maybe a half dozen deals with Annika Equities, which is my private equity firm. But most of what I'm doing is actually more on the GP side with TCS Annika Homes. Certainly they could go to tcsanikahomes.com to see what we're doing. Levine Capital is one of my LP investors, which accepts smaller investments, which is kind of important because I usually take, a minimum of 200,000, and he'll accept something like 50K. But yeah, that would be the best way to find out more information.
Google. You could Google us. You'll probably find.
Google.
Hopefully, you'll find us. I'm trying to build up an SEO.
All right. Well, thanks everybody for attending. I just posted there the link to TCS Annika, and definitely reach out to Adam if you have questions about investing, maybe potentially on the LP side yourself. Have a great night, everybody.
Take care, guys. Have a good night.
All right, guys.